This forum is the second in a series of 3 events on the theme of climate and disaster risk insurance. The first forum on this topic was held in Panama last month. We've published the key takeaways on the A2II website. The third and the last forum will take place in Bangladesh in November. I'm very happy to see so much interest in this important topic. There are also people following us through the live stream. Welcome to our online audience. I invite you to join the discussion on Twitter. The forum hashtag is 16thCF, and we will try as much as the time allows us to take and address your comments and questions on today's topic. For those of you in the room, please know that your folders contain evaluation forms, and I would like to ask you to fill them in and let us know what you liked and what you missed, or you did not like, perhaps, in the course of these 2 days. This will help us to focus better next time. Now, I would like to introduce the organizing team here on the ground in Johannesburg to you. Contrary to what your agenda says, my name is Dunja Latinovic, and I'm here on behalf of the Access to Insurance Initiative. The A2II is the IIS implementing partner for financial inclusion, and our mission is to support the insurance supervisors so that they can promote inclusive insurance and in such a way reduce vulnerability. Also from the A2II Secretariat, my colleague Teresa Pelanda. She'll be setting the scene for the forum with her introductory presentation. Our Janice Engove will be moderating the panel 2 that is taking place tomorrow. Teresa Stevens from Semfree and on behalf of the Microinsurance Network will be supporting us in the room today. Now, to give you a quick overview of the program, this forum will focus on the closing protection gap for disaster risk insurance, considering both the role of the insurance supervisor and the industry players. Our experts will share their experiences of successes, challenges, and lessons learned in this area. Tomorrow, you will have an opportunity to explore ways of overcoming the challenges in the workshop session. We will start the forum today with an introductory presentation, and then after the coffee break, we'll have a panel discussion on the role of the supervisor. Now, I would like to invite Ms. Delphine Medou, the incoming president of the AIO, to open the session officially.
Good afternoon. First of all, thank you for your presence, for attending the 16th Consultative Forum on Inclusive Insurance. On behalf of the AIO and all the organizers, I would like to welcome you to Johannesburg. I hope you've been able to attend the AIO conference this week, which I think has been, I may be biased, but quite successful. The topic of climate change is one that is essential for all of us in Africa to commit to. I've been personally involved from 2 angles already, and I think we should all take the example. I've been the member of the high-level consultancy group of the Insurer Resilience Global Partnership, but also as a board member of the Africa Risk Capacity Limited. Some of you are present here today. Thank you. The mandate of both organizations is essentially financial inclusivity. As you know, 14% of the population of the world lives in sub-Saharan Africa. That same population only contributes 2% of the global carbon emission in the world. Yet, our population remains the most vulnerable to climate change. Despite all this, only 3% of climate financing makes its way to Africa. Most national catastrophes remain uninsured, and the only way to protect our population is through preparedness, risk management, and insurance. But this comes at a cost. So I'm hoping after your discussions in the next 2 days, you are able to come together with concrete action points towards finding and reinforcing resilience on our continent. But more importantly, we attend many conferences like this, we attend many discussions like this, but what are you doing personally on the day-to-day basis to support financial inclusivity, especially when it comes to climate change? I would like to now declare the session open. Thank you.
Thank you, Delphine, for these words, as well as for opening the forum. Now I would like to invite Mr. Cohen Martin, Divisional Head in the Financial Conglomerate Supervisory Department at the Prudential Authority, housed within the South African Reserve Bank, to say a few words.
Good afternoon, everyone. Welcome to South Africa. As I've been introduced, working for South African Reserve Bank, when you attend these kind of forums, normally there's senior officials within the audience. So I just want to say, if you're a designated person, hope you find by just saying today as good afternoon. So I would say that all protocol observed in that regard. We as a Prudential Authority, which is housed in the South African Reserve Bank, sees climate and disaster risk together with the bridging of the protection. Thank you, sir. Thanks. That's fine. Let me repeat that. We as the South African Reserve Bank, specifically the Prudential Authority, see climate change and disaster risk together with the bridging of the protection gap as a critical element in the future sustainability of insurance sector and a critical contributor to the real economy. In South Africa, climate risk was low. However, it significantly changed. So let me just pause here and give you a sense of what I've seen over the last couple of days when I looked at climate change. So on Sunday, like normal South African, go to church. I was in the Mass, and the lecture for that particular day was on climate change. But at the same time, I must say the priest was a scientist, and he also spoke to climate change. So he was telling us the story of a professor at Wits University in South Africa that can do a scorecard for ESG, and specifically saying that, well, if you've got rehabilitation in that area, this is something on your scorecard, a negative. But the question that he asked specifically was, how do you value the lives of individuals? What will be the scoring of that individual? Again, that's climate change is important. And in South Africa, obviously, it's quite significant. So by merely listening to his sermon, it was quite inspiring. The other thing is, when you look at things like Press Reader, you look at, for instance, Mail and Guardian. In South Africa, I expected in a Mail and Guardian to have just one article about climate change in South Africa. But to my amaze, I could see five topics on climate change. So I just want to highlight some of the articles that I've seen in respect of climate change. So the one article was called Middle Charge with Breaching Environmental Laws. So you would know in South Africa, the whole issue of, from the 1st of June, there is a Carbon Tax Act effective. So in this particular case, Mittal Steel was charged, and as a penalty will be enforced against them. The second article is quite interesting. It's called Toxins to Take Your Breath Away. So that was looking at what's happening, especially this time of the year in South Africa, where you've got a lot of fires to keep warm because we're in our winter season. The next one was carbon catastrophe is hurtling towards us. And then the one that was clearly striking me was planet Earth declare an emergency. So if you follow what's happening in the UK, you will see that climate change is a state of emergency now in the UK. And obviously you will see from the regulators' perspective, they also had a policy statement issue. So a policy statement issue and put a lot of responsibilities to the insurers. So the specifically this policy statement looks at 3 risk areas, and the one risk is a physical risk, it's the actual assets. The second one was your transitional risk, as well as the liability component to it. So there's a specific policy issue that came out and specifically highlight that climate change is a governance issue, and there should be a level of accountability at board. That particular statement goes further and states there needs to be a senior manager responsible for climate change within the organization. Okay, in South Africa, climate change specifically, we had 2 significant events in South Africa, and the one particular one was the Knysna fires. The Knysna fires was one of the biggest open fires, veld fires that hit a particular area in South Africa. It lasted for 24 hours and spreading across considerable distance. Numerous houses and businesses were destroyed, and unfortunately there was also lives lost. Drought, wind, and particular trees such as the eucalyptus tree, which is highly flammable, caused the particular fire and the continuation of the fire. A total estimated loss, Vivian, correct me, is about 8 billion that we've lost, of which between 2 and 4 billion was covered by insurers. That clearly demonstrates that there's a significant component of our population that's either uninsured or underinsured. Okay? Then the second event in South Africa that caused a lot of issues, both from a regulator's perspective, is what we called in Cape Town Day Zero, the Day Zero event. So in 2007 and spilling over into 2018, also saw the worst drought in the Western Cape. The water levels in dams in Cape Town and its surrounding areas at one stage became so low that there was a talk of a Day Zero event. So Day Zero is basically the levels is so low that you can't provide the water supply to the households. Fortunately, before the invocation of Day Zero, there was rain in South Africa, but it was quite a critical component for us because we've got 2 of our biggest life insurers that's sitting in Cape Town. Secondly, we've got our major non-life insurer in Cape Town as well. But it also emphasized the whole matter with regard to your own risk and solvency assessment, where these particular issues like a Day Zero or climate change was escalated in a form of a scenarios that has been built in the own risk and solvency assessment. Okay. As you all know, insurance plays a critical role in supporting the resilience and stability of the real economy. Insurers provide financial protections to individuals and business against risks they face throughout their livelihoods. Risks related to insufficient savings for retirement, big problem in South Africa, or events that affect income generating capacity like sickness and deadness. We also know where insurance sector does not provide protection against these risks are often transferred to the state and posing a real risk to the public sector. Having been a supervisor for years, insurance supervisor for years, we always realize the impact that we have on our country and the people in our country. Most of our countries have vulnerable economies and a lot of disparity amongst people in the countries with significant and other challenges our government face, like unemployment, poverty, etc. Therefore, we must have a critical role to play in our understanding of climate and disaster risk, and to see how we can influence and support closing the risk protection gaps. Obviously, in South Africa, as the events of the Knysna as well as Day Zero, over the last couple of years, there has been a closer collaboration with industry, government, and the regulatory agents. So there is a framework that we're working towards that will crystallize all these new initiatives. So some of the initiatives that we've taken over the last years, and it's mainly spearheaded by industry. I'm thinking of the Green Geyser. Secondly, the agriculture public-private project. Obviously, it's still in the running, but we are working towards this, where we're looking at, for instance, index insurance, for say. This particular consultative forum agenda was developed to assist us in a better understanding the risks and the risks we are facing and how to mitigate those risks. If for one, I'm really looking forward to the discussions and will be taking over the next 2 days, and would like to thank the I2I for putting this event together. In closure, thank you, and I'm looking forward to all the participation, obviously from regulators. Standing here as a regulator, we'll also learn more what the market participants will be doing. And obviously, we as supervisors must encourage, and in some cases specifically deal where we're looking at whether you call it the innovation hub or a sandbox. We need to look at how we can foster that innovation within the sector in order to make these kind of initiatives a reality. Thank you.
Thank you, Cohen, for this, for your informative and inspirational remarks, I'd say. Now, before we start off with discussions and the scene setting, I would like to invite Dubel Chamberlain, the chair of the Microinsurance Network, to take the floor.
Good afternoon. I have the privilege of being one of the people on the stage to welcome you. I think you've been welcomed thoroughly. I think my colleagues did a good job in making climate change real for you in terms of the continent, but also in terms of the country level and the dilemmas faced by policymakers and regulators. I was also privileged to be participating in or listening in to the AIO conference for the last 2 days. And it's been really inspirational to see how the agenda has shifted, that we no longer have to have these conversations as a side event, but it actually has been mainstreamed onto the conference agenda. So I applaud the AIO and your work in that regard. I represent the MIN today. I'm the chair of the Microinsurance Network, and I'm also the managing director of Senfree. We're a member of the network. We're a think tank looking at how we can unlock the financial sector and the digital economy's contribution to economic development. So this is a space that we think and live in quite a lot on. I'm not going to talk to you about climate change, but I am going to reflect perhaps on how we affect change to address things like climate change. Over the last few days, we've had discussions around complexity within our firm, and we just came under the impression of what complex environment we live in. And a complex environment is one where there are many variables which are uncertain and many variables over which you don't have a control. And under circumstances of complexity, our old style of managing and planning and thinking about the future don't work. And I think this is a good example of that. So under complexity, where we don't know the solutions, we probe, we try solutions, we have conversations, we invite experts in, we share discussions across different categories of people who may have a different perspective or influence on those variables that we cannot control ourselves. The problem with complexity and things like climate change is also the fact that we cannot individually control it. And under those circumstances, it often results in paralysis, because what can one country or one regulator or one category of institutions even do? Or sporadic, desperate action, where we just try and do what we can. And I think the art of collaboration and coming together with our shared perspectives is the way of avoiding either the paralysis or the sporadic action and get us to systematically move in the direction that we all want to move. So the issue of climate change is not contested. By some perhaps, but I don't think this room would contest it. The question is, what do we do about it? And particularly, what do the regulatory audience and the insurance industry do about it? Because there are some aspects which affects you, but there are many aspects that fall beyond that. So the Microinsurance Network is a multi-stakeholder group where we bring together these various constituencies, the regulators and policymakers, the industry players, academics who think about these challenges, experts in the industry, as well as the donor industry who's looking to fund and support these various actors in achieving this objective. And we focus this on risk management for low-income households in emerging markets. So it focuses on the insurance industry, but it's not always insurance as we know it. And it's about emerging markets being able to be capacitated and informed to act. And many of our members are from emerging markets and come together to talk about topics like this. I'm very proud of this consultative forum because we feel we have contributed to its establishment and its predecessor, the Joint Working Group, and I've been working closely with the A2I in facilitating and informing some of these discussions. And I also just want to make you aware that this is not a workshop. The name Consultative Forum, I think, is important, and you must understand that what is discussed here has impact. The Consultative Forum and its predecessor has been instrumental in shaping IIS guidance on issues relating to insurance and inclusive insurance in emerging markets. We've shaped, together with the A2I, international standards. Those standards have been rolled out across emerging regulators across the world. These discussions shape the topics and the nuances of what will be taken into those spaces. It's also not just the regulators, it's the industry who can join these discussions and can have a voice and share a perspective. And sometimes we have to disagree. This is not an agreement forum. This is a consultative forum to solve complex problems, and we have different roles and different views. So I encourage you to take up that role in this conversation and constructively disagree if you think we need to move in a different direction. So this year, the focus of the Consultative Forum is on climate change. I think it illustrates this challenge of having to collaborate around a complex topic very well. And I invite you to join this conversation, to actively participate, and also to engage with the Microinsurance Network around a broader set of topics beyond climate change that we are trying to tackle in the industry. So with that, thank you very much for your participation in this, and I wish you a very productive 2 days.
Thank you, Dubel. So as Dubel already mentioned, the forum is a platform to foster dialogue between insurance supervisors and participants from the industry. It is also intended to be interactive with audience participation. We are welcoming audience participation in the room and online. We'll have several roaming mics in the room, and I repeat, Twitter hashtag is 16th CF, so please share your experiences in your area. Now, to setting of the scene for today and for this forum, I invite my colleague Teresa Pelanda from the Access to Insurance Initiative to give her introductory presentation of the topic. Teresa is an advisor at the Access to Insurance Initiative, where she supports capacity building activities and cooperation with insurance supervisors, focusing on the Caribbean and the CET regions. She is also responsible for the topic of climate change and disaster resilience. Teresa, I will hand over to you now.
Thank you very much, Dunya, for your kind introduction, and also from my side, a very warm welcome to the 16th Consultative Forum on Climate Risk Insurance. As Dunya had mentioned already, this is the second forum we are organizing on this particular topic, and it's actually a series of 3 events, so we will have one more event in November in Bangladesh. And I'm very pleased to give the introductory presentation to the forum today. I will try to make some references to the forum that we had last month in Panama, But I would also like to invite you to have a look at our website, where you will find a link to the full video, so you can watch all sessions from the event in Panama online. So, my name is Teresa, and I work for the HYI, the Access to Insurance Initiative, as Dunya had already mentioned. We are the implementing partner of the IAIS, the International Association of Insurance Supervisors, on inclusive insurance and capacity building. So our mission is to strengthen the capacity and understanding of insurance supervisors to facilitate and promote inclusive and responsible insurance. We do that on a range of topics related to inclusive insurance, but for this year we decided to focus on climate risk insurance and to do some further research on this important topic to also better understand what are actually the roles of the different stakeholders in helping to close the protection gap. We are currently working on a presentation on the topic that is also coming up soon. So for today, as Dunya said, my presentation is aimed at setting a bit the scene and provide some frame for the panels and discussions afterwards. So I will start with highlighting some of the challenges we are facing in light of climate change. I would then like to talk a bit about climate risk insurance, but also about the protection gap that we can observe in insurance. And conclude with some, let's say, considerations for stakeholders involved in what they can do to help building resilient or more resilient societies. In the last couple of years, we have observed an increased frequency and severity of extreme weather events like droughts and floods, cyclones, and so on. We only recently saw the devastating impact of Cyclone Idai in Malawi, Zimbabwe, and Mozambique. With about 3 million people affected, almost 1,000 people lost their lives, and over 170,000 were displaced. The World Bank expects that the cyclone cost these 3 countries more than $2 billion for the rebuilding of infrastructure and livelihood. And Africa is not the only region affected by these extreme weather events. What we heard in Panama was the heavy impact that had for example, the Hurricane Maria that hit land in 2017. And just to give you a figure, only in South America, they suffered $4.3 billion of damages due to natural disasters in only 1 year in 2017. So this is a problem that we are facing everywhere. And as I said, we are observing an increased frequency and severity of these events, and it is proven that climate change will even increase the number of such events. In 2018 only, 13,500 people lost their lives in all catastrophes that happened in that year. And what we see is that the impact is especially harmful on low-income populations. They do not only live in the most affected regions, but they also have fewer capacities to cope and to adapt to climate change. Lower-income people are more likely to live in flood-prone areas or in buildings that lack the latest anti-earthquake standards, just to give you an example. They are also less likely to have insurance or insurance protection. And the World Bank estimates that climate change will push an additional 100 million people into poverty by 2030. Also, a World Bank estimate is that the impact of climate change could reduce the global GDP by 3.3%. In the light of these potentially growing weather extremes, the need is greater than ever to support people in finding effective strategies to manage risk. And it's actually not only the immediate impact of these events. We also have to consider the effects that can persist over time, the indirect effects that persist over time. There are case studies of flooding in India, in Indian cities, that show that without social protection, disaster-hit families deplete their savings or borrow at high interest rates, often at informal sources, pushing them into poverty traps. Recent research also shows that disasters can affect victims for decades. Just to give you an example, a family hit by a natural or extreme weather event may have to reduce household spendings on food, medicine, education, which can stunt a child's potential well into adulthood. Besides these direct and indirect impact on the people directly, we should also have a look at the economical impact of such events. According to Swiss Re, the total economic losses from natural catastrophes and man-made disasters in 2018 were 165 billion US dollar, and only natural catastrophes events were about 155 billion US dollar. Insurance covered about half of it, of the losses, and this is already the fourth highest figure for a single year and above the annual average of the previous 10 years of 71 billion US dollars. So I think everyone would agree that the devastating impact of such events is obvious and that we need to take action, and that the need to take action is greater than ever. So what can we do to make societies, and especially the low-income segments of the population, more resilient against these catastrophes? One important tool to build resilience is the access to climate risk insurance. But before going into more detail on climate risk insurance, I just want to highlight that insurance is only or can only be one piece of a broader risk management strategy. It's also not a silver bullet. Insurance may be the most appropriate tool for large risks of low frequency that cannot be reduced or managed otherwise. But in the case of frequent or less intense risks, there might be other more effective ways to manage these risks, like, for example, investing in improved or disaster-resilient infrastructure. So just to highlight that insurance may not be suitable in all contexts, and it is also not a standalone remedy to manage climate risks. But it is one very important instrument within an integrated climate risk management approach. And what I just wanted to show you on this slide is how such an integrated approach for disaster risk management could look like. So this includes a whole process of planning, implementing. So it starts all with the risk identification to understand what is the risk reduction, prevention, mitigation, creation of a culture of preparation. And then the third pillar here is the risk transfer, which includes, for example, insurance. Risk preparedness is also important. We have to invest in, for example, early warning systems. And of course, we need to have approaches in place for post-disaster response and recovery. So this is a whole process, and insurance is only one part of it. But let us talk a bit about more climate risk insurance, and I will just start with some definitions. So when we talk about climate risk insurance, what we mean is any risk transfer solution that aims to transfer climate-related risks. However, traditionally, claims are based on an assessment of the actual damage to the insured asset, whereas climate risk insurance quite often is based on an index. So that means that when a weather parameter reaches a predefined threshold, an index triggers the payout according to a payout right that was defined in advance. Such triggers could be, for example, rainfall, temperature, or also crop yields for an area. So that also means that in some cases, or quite often, value does not match the insured actual losses. So that's the difference between the traditional insurance and the index-based insurance products that we see quite often in climate risk-related products. So there are different approaches or levels where protection can happen. Insurance can protect people directly or indirectly. And on this slide, I clustered them according to the levels of protection. So it's actually, so the level here depends on who has the insurable interest. So it's not who is paying, but who is protected. So on the macro level, for example, we have governments that act as the policyholders. Risk transfer solutions that protect contingent liabilities that the government might face in case of a disaster or a weather-related event. So the government can use this payout to, for example, finance disaster relief programs after a catastrophic event. An example for this is the African risk capacity, and we will learn more about the African risk capacity during one of the panel sessions tomorrow. Then we have the macro level examples. This means that the risk transfer solution protects the so-called risk aggregators, such as, for example, banks or MFIs, agribusiness, or humanitarian organizations that are offering key services to the low-income people, like, for example, microcredits. And then on the micro level, we have the risk transfer solutions that protect directly the individuals, like smallholder farmers, household small and micro entrepreneurs. One of the very first events, I just wanted to share that example with you because it was really one of the first events where low-income people were directly protected by inclusive insurance against a natural catastrophe. And that was when Typhoon Haiyan, a Category 5 typhoon, hit the Philippines in 2013, impacting over 60 million people and causing death of 6,300 people. Because of the devastation, the event was also followed by a large displacement, so it really had a devastating impact on the country. But this, as said, was for the first time. What happened was that a major event like this, people received payouts from their inclusive insurance products. Probably I should mention that the Philippines has been a leader in financial inclusion, so I think almost 30% of the people have insurance coverage, and the country has a comprehensive disaster risk management strategy in place where insurance is an integral part of it. After the event, over 126,000 claims, and maybe even more after this report was published, claims were reported and insurance were able to pay claims to people. Although the average claims payout of $108 may seem to be very small, this can be a very important and good starting point for people who just lost everything during this event. So as this case from the Philippines shows, insurance can be a vital tool to help people manage some of the risk related to these extreme weather events. However, the problem is that it's hardly available for poor and vulnerable people in developing countries. So the Philippines are an exception here, I would say. So let's have a look at the protection gap. In 2018, only half of all economic losses from natural and man-made disasters were insured. In emerging countries, it's only about 10% of climate risks that were covered. Currently, only about 100 million people in Africa, Asia, and Latin America are covered by insurance schemes against climate risks. This is what we call the protection gap. It is usually defined as the gap between the economic losses and the insured losses, in this case from natural disasters. And this gap is extremely high in emerging and developing countries. As I said, it can be about 90 to 100%. And this is something that has not changed over the last couple of years. So when we look at Africa, the economic losses in Africa in 2018 were $1.3 billion, and the insured losses only $0.2 billion. So the protection gap is also huge here in the region. This figure, however, there are different definitions of the protection gap. This is probably the one that is the easiest one to measure. There are other definitions like the one from the Geneva Association that says that the protection gap is the difference between the amount of insurance that is economically beneficial and the amount of coverage actually purchased. So there may be also risks that are not insurable, and a certain level of risk retention also makes economically wise sense sometimes. So, but let's just conclude with whatever definition you use. What we can observe is that the smaller the protection gap is, the faster economies can recover from natural catastrophes. So on this slide, I would like to show you some of the causes for the protection gaps. So let's have a quick look at this graph, which I found quite nicely shows what are the reasons for the protection gaps in markets in different levels of sophistication. It does not specifically focus on the protection gap in climate risk insurance, but what I would like to highlight with this graph is that there are certain aspects that are crucial when it comes to development of insurance markets, regardless of the type of products. So let's maybe focus here on this slide on the developing and emerging countries. These are the ones here, they are called frontier markets and emerging markets. And this is where, as we saw, the protection gap is extremely huge. So what we see on the demand side, what are the reasons for the protection gap from a demand side perspective? It's affordability, awareness, and also trust and culture can be constraints in these markets. What we see on the supply side are transaction costs, are insurers that do not see a business case or lack the experience and are therefore reluctant to operate in these markets. But what I also wanted to point out is here that especially in the developing and emerging countries, on the supply side, we see how important the role of the supervisors or the role of regulation is. It is here on this slide that is called institutions. And this means that regulation can unintentionally hinder the development of sustainable insurance markets by creating, for example, unnecessary barriers. So let's now see what the different stakeholders can do to enable the development of the Climate Risk Insurance Initiative and help reducing the protection gap. So we will hear several examples in the course of these 2 days during the event. I just wanted to start with some considerations. But let me maybe start with just 2 frameworks defining who are actually these stakeholders involved in playing a role in closing the protection gap. So we have, for example, the Sendai framework and the SDGs that clearly call for action to all. This includes the governments, the regulators, supervisors, and the industry. The Sendai framework for disaster risk reduction that was adopted at the 3rd UN World Conference in Sendai in 2015 has a paragraph, it's a paragraph 36C, that's why I put it here on the slide, that clearly says that the framework, that it specifically asks the private sector financial institutions, including financial regulators, to integrate disaster risk management, including business continuity into business models and practices through disaster risk-informed investments. So this is clearly a call for action to all. And let's now look what that exactly means. And let's maybe start with the government solutions or potential government solutions. So first of all, the government plays an important role in risk mitigation. Of course, they are the ones who can encourage people to adapt risk reduction and prevention measures, and just generally establish a culture of preparedness. Governments also play an important role when it comes in the coordination of all the stakeholders involved. So the different public entities, the ministry, the regulators, and the industry, and so on. It's good to have someone who's putting together the work streams and coordinating these work streams. Governments can also support by providing public goods, in particular data. So for example, data on specific target groups can be provided by the government, or also they can make sure that agricultural data is available. And of course, they can invest in financial literacy and insurance awareness to help closing the gap. As we have seen, awareness is also one of the causes for the protection gap. They can also address limits to insurability, for example, through the provision of public insurance programs. And also measures that are widely used to support the outreach and the scale are subsidies and compulsion. So just to give you two examples, in Turkey, earthquake insurance is compulsory for house owners, and in Tunisia, I think they are just making plans to make all type of insurance against natural disasters mandatory. Governments can also support in risk financing, for example, by facilitating access to reinsurance or acting as a reinsurer of last resort, especially at the very beginning when the data is maybe still lacking some quality to be approved by international reinsurers. The government can act as a reinsurer of last resort. Or governments can also help local insurers to pool their risk and so have a better access to the international reinsurance market. Let's now talk a bit about the regulators and supervisors and their role in closing the protection gap. So I mentioned that we are working on a study on the topic, and as part of it, what we did was a survey to ask industry representatives whether they were facing any regulatory barriers when they design solutions, climate risk insurance solutions. And as you can see here on the slide, 77% answered with yes, only 23% with no. So this seems to be very much in line with the graph from the Geneva Association I also just showed you. So the second question to them were, what kind of regulatory barriers were they facing when implementing such solutions? And these are just some preliminary results. The first, many of them answered, was a lack of a clear framework that defines how climate risk insurance is embedded in the national disaster risk finance strategy, and more generally, the lack of clear regulatory frameworks. So it is important to have regulatory certainty to provide these types of insurance. Then some people mentioned that supervisors were not aware of trends or new products and therefore rather reluctant to approve them. So this is also important for supervisors to respond to these emerging technological trends and to support also the use of these new technologies. Then what was also mentioned a couple of times was the lack of insurance awareness in the countries. We talked about this, the demand is low. When awareness is low, the demand is is usually also low. In many jurisdictions, we see that there is no legal recognition of index-based insurance products. So this is something that the regulator can also support with by allowing for innovative products like index-based insurance products. Then we sometimes find limits on who can distribute insurance. So here again, the supervisor who can allow for innovative distribution channels, just like mobile phones or other online tools. Taxes were mentioned. In some countries, climate risk insurance is taxed higher than, for example, life insurance products. So it could be worth considering some tax exemptions for climate risk insurance. And we already talked about the important role of reinsurance, and also here the supervisor can help to improve the access to reinsurance and also to international reinsurance companies. So to conclude this slide, regulation can be an enabler, but also an obstacle for developing sound insurance markets. Sorry, I missed. Okay, so let's come to the industry solutions, and I just forgot to move the slide. So you'll find all the presentations online afterwards. We will share them with you as well. So for the industry, what does that mean for the industry? What can they do to help closing the protection gap? So we have seen over the last, let's say, 15 years, promising examples and initiatives, but there's still much to do. And first of all, I would say it's crucial that insurance companies understand and adapt products, processes, and distribution channels to reach the large uninsured population. For example, through driving product extension and innovation, embracing technology, and promoting microinsurance and inclusive insurance. They can also support through actively sharing risk knowledge. The industry they are the experts on risks and risk assessment, so they can share this knowledge to support the risk understanding within the public sector. Insurers are also in a position to encourage insurance take-up, for example, by offering incentives for example, lower the premiums when people adopt certain measures to increase the resilience of their houses, for example. So to conclude this, the existing protection gap is an opportunity for the insurance industry to both to grow and to help population to be better prepared to manage the financial hardship that disaster events can inflict. I'm coming to an end now. So let me just show you this last slide, which actually was presented by my colleague Denis Garot at the event in Panama, where he did the introductory presentation. And it's just to highlight that that what is also the very important part of this event, that is the dialogue. It's critical. So let's start us with the dialogue and let us improve our understanding of risks and what actions are necessary to mitigate it. The next step when we leave the room is openness to make changes. And once you've made these changes, it is crucial to also monitor the evolutions. So are these actions that you are taking really having an impact, especially on the protection gap? Let's have some very final concluding remarks, and let me maybe just conclude by just highlighting what I said again. It's crucial, the dialogue, and I very much hope that this forum will help to better understand the roles that the different stakeholders have in building resilience and therefore bridging the protection gap. So let's start the discussions, and this forum is really meant to give you a platform for these discussions. So I'm very much looking forward to these 2 days of panels and discussions. Thank you very much for your time.
Thank you, Teresa, for this very informative presentation. This sets the scene very nicely for our afternoon discussions. It is now time for our coffee break, and it will be lasting 15 minutes. So just make sure to be back in the room sharply at 4:15 for the start of our next session and panel discussions. Thank you very much.